Just in, silver hits $58 for the first time in history, and the entire precious metals market is now reacting. We're watching delivery requests surge, long-term resistance levels being shattered, analysts calling structural shifts, and even warnings that the paper markets might be cracking under real physical demand. From copper's breakout setup to silver's smashing a 15-year ceiling to warehouses tightening and futures markets flashing early stress signals. Today's commentary breaks down every major update from the analysts and researchers who are tracking this moment in real time. Let's get into it. Bar chart shared just in. Silver hits $58 for the first time in history. TrendSpider states, silver just smashed a 15-year ceiling. We are now in price discovery mode. A 15-year breakout is not something that happens by accident. When a market enters price discovery, it simply means the market is searching for its true value without historical resistance levels acting as a ceiling. It's a major technical milestone. Just Dario adds, confirmed this rumor on silver was true. Check out the CME December 25th silver futures delivery data between Wednesday 26th and Friday 28th. And then follows with 7,330 silver 2025 future contracts already requested for delivery. That's 36,650,000 ounces of silver. If the March 2026 silver future contract starts trading in backwardation, that's going to be a hell of a fireworks show. Delivery requests of over 36 million ounces is substantial. The key phrase here is backwardation. That's when the near-term futures price trades above the long-term price, something that very rarely happens in healthy, well-supplied markets. If backwardation appears, it signals tightness in the physical supply chain. Alistair McLeod wrote, I think the paper game is being fractured through silver and then gold. We'll look back on these events and say they marked the beginning of the decline in the entire derivative business. Alistair often focuses on the difference between paper metals, like futures contracts, and physical metals. His view here suggests the balance between paper claims and real, deliverable metal is becoming stressed. Whether or not this plays out long-term, it's an important observation about market structure.
David Morgan shared, COMEX Silver Fact. In the delivery month, no trader can control more than 25% of the exchange's deliverable silver. That limit is not a fixed number of contracts. It moves with inventory. Deliverable supply equals registered plus eligible bars in COMEX vaults. Tight warehouses equal tight limits equal higher squeeze risk. That's the rule. David's explanation is extremely valuable for understanding why tight inventories matter. The rule isn't static, it shrinks when warehouses shrink. The tighter the vaults, the lower the cap, and the higher the risk of a delivery squeeze. Silverseek.com shared, silver breaks out of 45-year holding pattern. Outlook for PM sector by Clive Mound, Friday, November 28th, is viewed as the most important day in the history of the silver market. Why? Because as a result of breaking out of the bullish, a 45-year pattern is practically an entire era. Analysts only use language like most important day in the history of the silver market when the technical structure changes in a way that's never been seen before. This gives historical context to why people are paying attention. Willem Middelkoop wrote, a must-read on silver. One thing is for certain, the market that delivers physical will set the price. Always has. London and New York just stopped qualifying. Willem's point is simple. Real metal dictates real prices. If major financial centers are not able to maintain adequate deliverable inventory, price discovery shifts elsewhere, usually where the physical metal actually moves.
Rashad Hajiev writes, when silver starts moving, it is lightning fast. By midweek, it could be trading well above $63. But silver is also very volatile. Rashad is pointing out something that longtime market watchers already know. Silver tends to move in sudden bursts. It's one of the fastest moving major commodities when momentum kicks in. But what I like about his message is that he balances it. He acknowledges both the speed and the volatility. That's an important reminder, especially during dramatic price swings. Silver doesn't move in straight lines. His post highlights sentiment, momentum, and the emotional nature of this market without making any predictions or telling anyone what to do, just an observation of how quickly silver can change character. Just Dario writes, Silver Dec 25 Futures OI 2.9K. Silver Futures American Options $60 OI 24,393. $65 OI 1,674. $75 OI 961. $80 OI 550. Silver can be squeezed to $60, but still, assuming all those options are exercised in futures and delivery is requested, the market won't break yet. This is a detailed look inside the futures options structure. When you see heavy open interest clustered at certain strike prices like $60, $65, and $75, it shows where traders have positioned themselves. Dario's point is interesting because he acknowledges the possibility of a squeeze toward the $60 level, but he also stresses that even if all of those options were exercised and delivered, the system would still be under pressure, but not at a breaking point. It's a reminder that delivery stress builds over time, not in one sudden moment. Jesse Colombo writes, Silver continues to surge after its Friday breakout. It's up nearly 2% in the Asian trading session. Everyone has been telling me that a pullback or retest is imminent, but I wouldn't hold out for that after such a strong breakout. Jesse's observation captures the psychological side of markets. After major breakouts, traders often expect a retest, a pullback, or a pause. But in strong momentum moves, sometimes the retest doesn't come until much higher levels. He's not making predictions, he's simply pointing out that momentum is currently overriding the typical pattern people expect. It's a reminder that markets don't always behave textbook. Echo X shared, the volume on silver is insane. It's crazy people don't realize that we are in price discovery mode. We don't know the true price of silver, and this thing could go to infinity and beyond. Echo X is highlighting the intensity of activity. High volume means high participation, and high participation during a breakout usually signals conviction. When he says price discovery mode, that's a technical phrase, not hype. It means the market has moved beyond old resistance zones and is now searching for its true value in real time. The infinity and beyond line is obviously enthusiastic, but the educational part is that price discovery removes the ceiling and forces the market to determine new fair value levels without historical anchors.
Disclaimer. This video is for educational and entertainment purposes only. It is not financial advice, not investment advice, and it does not recommend buying or selling any asset. Always do your own research and consult with a qualified professional before making financial decisions.